Hey folks, welcome to the Trader Hotseat. If you're new to trading and trying to find your footing, or perhaps you're trying to learn about indicators, which ones to use, and how they work, you've come to the right place. Because today we are backtesting the backtesters. Here's how that works. First, we will browse to YouTube, and here we are. We're next going to find a popular trading strategy taught by a YouTube trader, and then put it through an honest, non-cherry-picked 100 trade backtest. Now, when I talk about YouTube traders, who am I referring to? Well, this sort of thing here. Make passive income easy, success guaranteed. This is by TradeIQ. We have one over here from the trading channel. The only candlestick pattern trading video you will ever need, with a very simple just buy the low and sell the high. And then we have some other ones here, more indicator-based options, like from Quantum Trading Strategy, and we've seen him before with his best 3 magic buy-sell indicator in TradingView, secret winning 100%. And here's another magic indicator set up from this guy. And the list goes on and on. We could browse through this all day. Now, I'm very skeptical of these claims, and you should be too. As if this guy, Quantum Trading Strategy for instance, has the secret solution to infinite wealth, and it's right here on YouTube for free, voiced by a robot. That sounds a little fishy, does it not? Well, we are fixing to find out. Who is in the Trader Hotseat today? Well, TradeIQ is back. We will be revisiting this strategy right here, the I found the best day trading strategy ever, #1 on the channel. He claims that you can make your first $10,000 easily with a high win rate. Now, I'll say it once more, this sounds a little too good to be true, but I will admit, we did have success with this strategy on our first test. So then, let's get the strategy set up on the charts. We've made it to TradingView.com on a totally clean chart, and we have our chart set to the 15-minute. But first, let's head up to the top, click on the Indicators tab, and search for EMA. We'll use this one down here. It's the EMA 20, 50, 100, 200 from Dr. Sweets. Click on it and it will be applied to the chart. Next up will be the trend meter. And we'll use this here from LIJMC. And lastly, the volatility oscillator from VeryFid. Now let's configure these indicators. We'll close out of this, head up to the top left of the chart, hover over the EMA icon here, and click on the cogwheel. Now this is a 20, 50, 100, 200 indicator from top to bottom, fast to slow. We need the 50 and 200 period, so uncheck the red and cyan boxes. Now I do like the orange here, but I'm going to increase its opacity and the line thickness just a little bit. I do like the dark blue as well, but I'm going to flip this over to black. It'll look a little bit cleaner on a white chart. Increase the opacity and increase the line thickness. That should be good to go for the EMA, and I'm sure there's a Giants fan out there cheering at their screen somewhere. Now onto the trend meter. You know the drill. Let's open up its settings, hover over here, and click on the cogwheel. Now under this style tab, we do not need signals 1, so we can uncheck that box. We do not need the trend meter 2 or 3 either, just a little bit cleaner looking. Finally, we can open up the volatility oscillator settings. And if you're on a white chart, change the spike line here to black. If you're on a dark chart, feel free to leave it as is. And next we're going to click on the line style, and we're going to change this to the step line. I'll also uncheck the zero line and spike fill boxes. And we do not need these bullish labels or bearish labels, so feel free to uncheck those as well. Okay, so we should be all set. Go ahead and click OK. We're good to go. Now on to the long conditions. First, price must close above the EMAs. And secondly, the 50 EMA must be above the 200. We do have price closing above the EMAs here, and the 50 EMA is indeed above the 200. Next, we would look for a green trigger dot to print. What is a trigger dot? It's one of these right here. Once we see a green trigger dot print, we can then look immediately below and ensure that both of these trend bars here are green. If both trend bars are indeed green, we then look just below here and ensure that we have a break over this high blue line on the volatility oscillator. When all of these conditions are met at precisely the same time, we may then enter a trade. So with all of these conditions met, we may then open a trade at the close of this candle. Where does our stop loss go? Just under the prior swing low. And our price target? Well, we have no fixed risk to reward ratio with this strategy. Instead, we will wait for this top row of dots here to flip red. Once we have a red dot print, we would then exit the trade. Here's another long condition example. We have our 50 above the 200. We have a green trigger dot with both trend bars green and a spike above the volatility oscillator, the high blue line. If we entered into this trade and we waited for that red dot to appear, we would have one right here. However, according to TradeIQ, this is not a valid exit. We only close the trade when a red dot prints in profit or if our stop loss is hit. You would ignore this red dot right here and allow the trade to run. We may be able to close in profit here, but we still are waiting for a red dot to appear once this closes in profit. And unfortunately, our stop loss is hit. I'll go ahead and mark this as a $100 loss. Now let me go and find an example of a short. As you may have guessed, our short conditions are just the opposite of our long conditions. In this case, the price must close below the EMAs, and the 50 EMA must be below the 200. As you can see, we have that EMA cross here. The 50 is now below the 200, and price is closed below the EMAs. We do have a red trigger dot print here, 2 red bars below, and a spike under the low blue line of the volatility oscillator. This would be a valid short condition, so we may place a trade. Again, our stop loss will be just above that prior swing high, and we have no fixed risk to reward ratio. We are now going to wait for this top bar here to flip green. We do have it flip green, but unfortunately we are not in profit. In this example of a short, our stop loss was hit again. We did have plenty of green dots here that would tell us to exit, but we never had a chance, as according to TradeIQ's rules, we may not exit the strategy early in a loss. We either need to wait for price to swing back in our favor and show a green dot here, or our stop loss is hit. It's one or the other. As I said in our last video, there's an old saying, everyone's a genius in a bull market. This is especially true in a strong trending market. And again, the biggest issue with any of these indicators are false signals, which are bound to occur frequently during sideways ranging price action. In this strategy, the trend meter is expected to keep us out of that ranging price action, but we'll see how it performs. We're simulating a non-compounding account with a $10,000 starting balance. Each trade will risk $100 just to keep it simple, although I will show the results at the end of how a compounding account would have fared. This is Ethereum to USD 15-minute. TradeIQ is back in the Trader Hotseat. Say your prayers, let's go. Well, the results are in, drumroll please. 58 winners, 32 losers, not bad. These 100 trades took place over the course of 89 days. And with a manual exit strategy like we have here, I hope you don't have a day job or a night shift. You'll need to spend a lot of time in front of your PC. And would that be a wise decision? Well, trading a non-compounding account, risking $100 per trade, we have an overall loss of $644. And that's a surprising result, especially with that win rate. Now, had this been a compounding account where you were risking 1%, not a fixed amount per trade, how would it have turned out? Something like this. At least it's consistent. The average winning trade was $61, the average losing trade was $100, as there exists no exit strategy within TradeIQ's setup. At best, we had 11 consecutive winners, and at worst, 5 consecutive losers. So then, with this test showing very different results than our first test, and I'll link that video right up here in the top right, what can we say about the effectiveness of this strategy? Well, when the market is trending, the strategy works, and when the market is ranging, it does not. Simply put, it's not the indicator setup or strategy that works, it's the market that works. So long as we're receiving entry signals within a ranging market, the strategy tends to fail, and I expect this is why our previous test of this setup performed so well. So, who would you like to see next in the Trader Hotseat? Which strategies would you like me to test? And do you have any faith in this strategy after seeing these results? Do you think maybe it just needs a few tweaks? I'd say the strategy could still use maybe one more test, perhaps in the Forex market, but let me know your thoughts in the comments below. Oh, and before you take off, please make sure to leave a like and subscribe if you found this content useful. It means more than you know. Until next time, take care. We'll see you soon.